The AIM markets has been one of the interesting markets that we've seen trade this year. And in fact, it's ended at record highs. Of course, it took part in the big declines we saw around the real depth of the COVID crisis, the initial lockdown in mid-March, big declines across all the major sectors within the small cap index. And here we are now sitting at the end of the year looking very positive out to 2021. Let's get an update now with Chris Boxall from Fundamental Asset Management, who runs portfolios across the AIM space for inheritance tax purposes. Chris, good to talk to you. Good to catch up with you at the back end of this year. And as I said, as we do so, we are talking about record highs for the index. What are we expecting for 2021?
Well, yeah, it's been a very good year for AIM. Pretty unexpected, really, given the problems we had over the course of the year. AIM, as you alluded to, hit this record high in terms of value. At the time of talking, it's 118 billion. That's the highest it's been. That's up from circa 104 billion at the end of 2019. And you know, we've seen some really strong moves from certain sectors and certain stocks. Despite the year being a struggle for new issues, this year is very different for AIM because we've seen a lot of secondary issues and far fewer IPOs on the market. So you saw a lot of money coming in to support companies when they needed it, and there was no shortage of support. That's what's been all the more remarkable. And we've seen AIM material outperform the main UK stock market. So AIM at the moment is up circa 15%, and that's for the year, and the main market's still underwater, which is really incredible. And it's again this drive and focus on growth. We do feel that valuations in some areas look a bit stretched, but we'll go on to that.
Yeah, this quite often happens, doesn't it, on AIM? You get when the markets go down, you get an underperformance, or rather, you get a bigger drop, and then when the markets start to rise again, you get AIM stocks. The more interest seems to be around these smaller cap stocks. So this pendulum swing seems to, as you say, taken us up to a record high. Is it the larger cap stocks with AIM that's been driving this, or is it the small tiddlers, the penny stocks?
Yeah, you have seen it driven by the large stocks. So and that's highlighted perhaps in the top 30. We did a snapshot of the top 30 AIM companies. Top 30 AIM companies by value at the time of talking now are about 51 billion in value, and that compares at the end of last year only 42, just under 42. And you've now got over more than 22 companies valued at more than $1 billion each. And that compared with only 16 at the end of 2019. So big is driving it. You've got 30 stocks. The 30 stocks in the top 30 are effectively represent more than 40% of AIM by value. And there are 820 odd companies on AIM. So as you say, that it's being driven by these big stocks, which are getting bigger. And the ones just below the billion value are creeping up all the time as well.
What about sectors?
Sector-wise, we've seen some strong performances in some unknown areas. Well, many investors really wouldn't have been looking at them before. In 2020, we saw gaming has been a massive outperformer. We had one gaming stock in the top £1 billion companies at the end of 2019, and we've got 4 in the top sort of top bracket as I speak. And one of those companies, Codemasters, has really highlighted the appeal of the sector. Codemasters has been subject to an approach, initially by a large US company called Take-Two Interactive, and subsequently by Electronic Arts, an even bigger gaming company. And there seems to be a bit of a bidding war going on now with Codemasters. But gaming itself, I mean, we've seen that increase, just those 4 stocks, up 2.7 billion in the year, which is pretty incredible. And it's been one of those pandemic winners.
Talking about the pandemic, we've got to talk about healthcare. I guess that's been another area where we've seen a lot of interest.
Healthcare, and it's tricky with healthcare on AIM because there are several categories. And for healthcare, we've bracketed medical equipment and services, pharmaceuticals, and biotechnology. But healthcare, again, has been a huge winner, up 4 billion. So end of December, 12 billion value, circa 16 billion now. And there have been some staggering winners in here. And top of the pick is this tiny business called Novacyt, which is involved in providing testing for COVID-19. Novacyt started the year, well, at the end of 2019, it was only valued at £5 million, and it's currently valued at more than 500 million. It's been even higher. It's been circa 700 million. So 5 million to 500. And I should emphasize, I don't think a capital raise has been involved in this. That is pure growth. It's turned this business into one that its future may have looked a bit worrying, to something that's going to be potentially awash with cash that can be redeployed into other areas. So a fantastic success story. And hopefully it could go on to even greater things. But it's not alone. There have been many other tiddlers from this sector that have also got on to great things, as you can see from that big expansion in value over the period.
What about fuel cell technology? We've been talking a lot this year about fuel efficiency, the way in which we engage with the use of electricity particularly, but what about fuel cells? Because that's an interesting area where we're seeing a lot of new companies coming through as well.
You're right, and fuel cells been another fantastic area. And it's slightly different to healthcare. Healthcare was driven by real demand and immediate demand, and you've quickly seen rapid reactions to that in sales and cash coming through to these healthcare companies. Fuel cells is a bit of a tomorrow story, but so much interest in there. And you've got this subsector alone of the alternative energy space. Fuel cells companies have added another over 3 billion of value in 2020, and you've seen now 2 of those become billion-pound companies. One of them is now over 2 billion in value. So it's really incredible. And I think we're going to go on maybe to talk about how that may evolve in 2021. But huge AIM success story. You can't find that kind of exposure on the main markets. That's another unique feature of AIM, where you're going to find these niche sectors that could potentially boom and are going to be part of our economy going forward.
Which companies are we talking about here? What are you looking at particularly?
Well, there are 2 here at the top of the pile: ITM Power and Ceres Power. ITM has been the big winner. That's over 2 billion value. It's got some agreements with some big German industrial groups. But we've got to see now, these valuations are now well in excess of what's actually been delivered. There's been a lot of hype around this sector. As I was saying, slightly different to healthcare, where you've got real reality there, tangible need, immediate. Here, this is all about the future, the next 3, 5, 10 years. And maybe some of these stocks have got ahead of themselves. Recent announcement today, even from AFC Energy, another one of these fuel cell companies, which has secured a deal with a very large international industrial group to commercialize its technology. So very, very interesting sector.
Yeah, I just want to quickly reference Ceres Power. You mentioned it very, very briefly, and I think this highlights this ramp up that we've seen. In fact, you agree? Do you think that maybe we've gone a little bit too far in this sort of company then?
It remains to be seen. It's been around this momentum trade, and the issue now is these businesses have got to start to deliver. The operations have now got to deliver as the share price implies. A 2 billion valuation for a business that has relatively insignificant revenue and has not yet demonstrated it can actually produce things commercially and roll it out. It is clearly extreme, and it's noticeable that there are very few viable forecasts and estimates out in the market for these stocks. You can't forecast it. Is it going to explode? Are they going to explode? Are they going to be able to deliver on the huge promise? Or is it now going to meander? They're going to meander for many, many years. And before this, the latter was the case. They've taken a long time, really, to come good.
We've been talking a lot about new sort of technologies around these sectors. What about hardware, software technology sectors, and also telco-related businesses as well? How's that been performing over the year?
It's been very, very strong, perhaps not as strong as people may have imagined. Technology has been the big success over 2020 through the pandemic. A lot of people are working remotely, still at home. And you'd have thought that a lot of the technology players, they'd have all done very, very well. But perhaps it hasn't really explode as much as people may have imagined, at least on AIM. Although it still delivered some pretty attractive growth. I think the value, what have we got up, about just under 2 billion for the year for the software and telco and technology sector on AIM. Again, that encompasses a lot of different several sectors. It's not just software. So there's there as well. And that is big in terms of companies. There are 113 companies bracketed in this area. So it's a big contributor in number of companies, unlike, for example, the fuel cells that we're talking about, which is relatively few companies, but it has very high value. So you've got a lot of tiddlers there. And again, we can maybe go on to talk about how some of these may, start to deliver over the next few years.
Well, let's switch the conversation then on to 2021, because I think you set the scene nicely, taking us into the back end of the year. We've got these record highs, we've got the stocks doing well. What about 2021? How are you viewing this as someone that continually looks at this particular sector, the small cap sector?
I think generally speaking, AIM is in really good health. It's demonstrated that over the most challenging period in its history. And luckily, the shrinkage was going on well before. So you've had a large number of more robust, smaller companies on AIM, many of which are growing very, very strongly. So that's been a real positive in 2020. The key aspect from us, we are addressing growth stocks, but we are also buying into companies that have demonstrated their business model works. Over 2020, we've seen this momentum play. So things have been bid up, and we've had this momentum play. A good question mark is, will we have a return to sort of rational investing where people are looking at profits, real sales? Are we going to see that? I'm not convinced. I think this momentum play is going to continue for a while longer. And that's reflected in the huge number of new customers or new clients that have opened up trading accounts. Your business as well, Jeremy, will have seen a huge number of new account openings. And these new investors, or new traders more likely, are driven to sort of what's hot. And they're not old school sort of analyzing and crunching the numbers and looking at profits. They're looking at trends and what's it. And I think that's going to continue for a while, because we've had a wave of new interest, which is great. Great to have new interest in the stock market.
Oh, absolutely. I'm always for looking for new areas. One of the new areas, interesting enough, has been ESG, this environmentally, socially, the governance type of area where people are looking for new ways of producing business models and so forth. Is this something you're noticing?
I think this is going to be massive, and I don't think people should view it as a fad either. We've had the reaction. We've actually run an ESG seminar, ESG on AIM, sort of does it mix, because it is tricky for smaller companies, but I think it's been massive. One reaction we've had is, it's just a fad. The reality is smaller companies are being driven into this by their customers. They have got to address sustainability issues, otherwise they're not going to get business. So this is at the lowest level. This is getting big, and we've noticed many AIM companies are having to address this now in their reporting. They're mentioning sustainability. They're mentioning ESG. Websites are starting to have an ESG section, and we think AIM has actually got some interesting businesses here. One I draw attention to is a business called Impacts Asset Management. It's been a pioneer in investing in ESG. Really interesting business, ahead of the game, delivers great margins, and it's really proven itself already. And it's delivered way back at the other end of the scale. Is an absolute tiddler called Bonhill, which is into publishing, media publishing, B2B, and it well before the pandemic and the ESG sort of phase has been ignited. It had this little product called ESG Clarity, and that's attracting a lot of interest. So you've got two businesses there at very different ends of the scale, but both sort of relatively pioneers and ahead of the game, and ahead of others now, which are coming into it.
Let me just press you on the points you mentioned earlier on about what has been happening in 2020 about the energy management and the energy storage space. You implied there that we'd be talking about that in 2021. What is it you're going to be looking for next year from this particular area of opportunity?
I think energy management, energy storage is going to be huge, and AIM again has positioning in there. If there are going to be IPOs, and we hope they're going to be more IPOs in 2021, we think there could be some in this area. In terms of storage, there are a lot of companies on AIM already covering that. Very small one involved in hydrogen storage. We've mentioned fuel cells already. If this hydrogen fuel cell boom is going to take off, you're going to need a lot of storage. There's a little business called Pressure Technologies that is a specialist in manufacturing cylinders. Again, relatively little known. It's had a lot of problems, but one to look for. Smart metering systems, been around for a while, managing energy storage. Other names, and one that has sort of really leapt up recently in terms of pure storage is Invinity Energy Systems. Invinity has developed vanadium flow batteries, which are very much going to be linked to grid storage. Renewables going to need more and more storage to make it all work efficiently. So Invinity is an interesting play on that, and it's starting to attract, as I say, a lot of interest. And in the alternative space, you've had business like CIMAC Atlantis Energy as well, tidal power, power station conversion. But those first three, Precious, Smart, and Invinity, look ones to follow. Again, around that kind of theme.
Let me just quickly whiz on. Electric vehicles are going to be big. We know that. One wonders how much further ahead they've got really of reality. But is that the space you're watching?
Absolutely. It's going to explode in the UK. They've set this target number in terms of banning petrol and diesel by 2030, which is incredibly bold. I don't know how they're going to do it. So sales of new petrol diesel vehicles will be banned from there. And you're going to have a massive rollout of EV charging. I don't know how they're going to do it, but I think there are estimates out there that the market's going to be circa 50 billion in size for EV charging, which is huge. And there are actually a few listed companies that specialize in this. One that we've kept an eye on and we actually withheld in our portfolio. It 3 years ago, it set up this EV charging business called eSmart, which is actually going beyond just electric vehicles. It's going to be all about electricity management in terms of the additional grid pressures. And the company is called Nexus Infrastructure, NEXS. Again, it's not that huge. It's had problems with part of its business over the last few years, but we think its EV business could really explode over the coming years. And management have a track record. This business is still controlled by its founding management, and they have a track record of developing from startup businesses. They've done it with one of their businesses in the group called TriConnex, and hopefully they will do the same for eSmart. But they've already got this going. They've got an order book. They've got sales, and definitely one to keep an eye on. Nexus Infrastructure.
Can I move you on, if I can, to talk about acquisitions for next year? What's it looking like for M&A within this space?
I think it's sadly looking quite good. Sadly, I say, because we find it's a shame that companies are taken over often too early. And unfortunately, UK PLC is most definitely up for sale. When I say UK PLC, I think these are largely businesses which have a decent international presence, where are cash-rich buyers and can gain exposure relatively cheaply because they're trading at well below valuations they might be, say, on the US market. And we've recently seen a deal for IMI Mobile, nice business being acquired by Cisco for a huge premium. I think it was a 40% premium. I mean, the valuation already looked pretty punchy, but you can see it's probably far less so relative to what they might have to pay on the US market or from a private equity seller. So yeah, we fear that a lot of decent UK companies may receive approaches. We mentioned it earlier with Codemasters in the gaming space. We'd like them to stay on AIM because, if they go, what's going to take their place? This is why we need these newer IPOs coming onto the market. But yeah, you need to choose wisely, though. I think there are some real value traps in there. I don't necessarily think some of the UK-centric businesses that seemingly trading on deep, attractive valuations are probably that attractive to acquirers or overseas buyers anyway.
Scooting on really quickly, healthcare, we referenced this earlier on with Novocyte. What about the healthcare sector? Because we've got a lot of the AIM stocks that are involved, and there's sort of moving around the COVID issue. Some have got direct connections with it. Some have been bid up because of COVID has become a big pharma story. What's it looking like for next year?
I think healthcare was totally unloved until this year on AIM. There were pockets of interest, but generally early stage ones weren't really well followed. Investors had no interest. Suddenly you had COVID. A lot of them were involved in testing boom. And I think as a result, in this growing focus on healthcare, people's health is clearly very important. And AIM has a part to play there. So I think we could have a wave of, if we are going to see IPOs on AIM, a lot of them could come in the healthcare sector, because suddenly investors saying, hey, this is a place we need to be. We've seen that analysts as well and brokers are suddenly upping their research commitment there. So it's going to be interesting. However, from an investment perspective, that's not necessarily a great thing. Getting on a bandwagon after it's left, is not necessarily a good thing. So I think you've got to be careful here. Don't get sucked in by the hype, because this happened years ago. We had a lot of hype around early stage healthcare, and loads of them came on. A lot of them subsequently failed. So choose wisely. I see we just have another healthcare related play list on AIM at the end of the month. So perhaps more of those to come.
Yeah, really good example of this. Just want to quickly show the chart of Avacta. We were following this earlier in the year, 1,400% up from the lows to the highs in just a matter of weeks. I think that just goes to illustrate this. Chris, if I can to move on to talk about travel and leisure, a sector massively hit. People keep on asking me within the client base at IG, when's the right time to get back into this space? It goes as well for hospitality. The pub groups, of course, also having all sorts of problems this year. But what about the travel space that you're watching for 2021? Is there an opportunity, do you think, in buying it at these low levels?
There was initially a good opportunity, some of the bigger plays on AIM, and I think there is going to be a huge one. I think it's a space where the survivors, the well-funded survivors, with good business models that are really adapted, could go on to thrive. And I think AIM has a few of those. I mean, it's a big sector as well for AIM in terms of companies. 28 companies at the end of November, compared to 27 at 2019, and that's important. So they've survived. You've seen a lot of them survive. Who would have thought that a lot of these things would be still around after the year we've had? Circa 4.2 billion value of the sector, compared with 4.4 at the end of 2019. So not only have survived, but the actual overall value, hasn't dropped that much. I appreciate we've had some capital raises to prop them up, but there is as you've suggested, there is a huge recovery play here. When, who knows? We mentioned some names. Jet2, which used to be called Darts Group, the leisure airline, we think it's really well placed. It went into this better structured and better financed than any other airline, we feel, on the stock market. Lots of cash, big dominant founder shareholder. They battened down the hatches. So Jet2 could be a big winner. Apparently it's had great service. People have had great service with all their cancellations. We've heard really good reports out of them for that. So we hope they're going to be rewarded when things do open up. Other plays, clearly pub groups, Young & Co., restaurant chains, lounges. I mean, one of the most interesting stocks in this is a business, and perhaps a sign of the future, is a new listing in the period called Various Eateries. And Various Eateries was decided to list in September. You've got to commend their bold approach. I mean, to list on the stock market when nobody wants to go near a pub group and restaurant group is pretty good. So perhaps Various Eateries is one to watch. Perhaps they know something we don't. And also in terms of outdoor events, a business called Arena could be a recovery play. A lot of their customers have had to cut events, and Arena could be one to watch. But you're right, Jeremy, timing. When do you jump into these? We took a piece of Jet2 when it got down to real lows. We held it on our AIM portfolios and we decided to top up. And we've been sort of regular buyers, but in order to really get committed, we saw that jump. But the next stage up has got to be when we see results from the vaccine and when we see holiday markets opening up again.
Just one final area I want to touch on, if I can, and that is the area which no one really wants to see do well, but obviously there will be opportunities here, and that is the areas which will be catching all the bad news stories, the pawnbrokers, the credit agents, the people that deal in other areas of the market that don't really fall into favor when things are going really, really well. Thoughts on that particular area?
Well, I think pawnbrokers have a very tough press. I mean, this is a regulated area, and they've delivered this service for 1,000 years or something. So this goes back a long time in history. But pawnbrokers have clearly been hit, although part of their business has benefited from the elevated gold price. But people haven't been able to visit shops. They've had to adapt very quickly. Also, alternative finance could be a winner in 2021. The reason we say that is there's been a lot of free money slushing around, or very cheap money. People haven't spent very much. When they start opening their pockets and going out again and enjoying life, this is all going to come back, and that free money will have gone. That nice government support will have gone, and we think these businesses could actually benefit from that. And pawnbrokers, as I say, are very well managed, highly regulated areas, and they could be a strong recovery play. A few names we've got on the H&T Group and Ramsden's, although the latter, Ramsden's, has sort of been focusing more on its jewellery sales and high-end watch sales. Both businesses as well, interestingly, notably Ramsden's, make a lot of money out of foreign exchange. So again, travel markets opening, they're going to have a double win in here from more FX business coming their way. We think it's interesting. Alternative credits, business called Morses Club, which is home collected credit, been around a long time. Again, it's adapted to online, but when we go back to things being, opening up, could have a strong bounce. And back in the foreign exchange FX exposure, we've had the likes of Argentex, Alpha FX, and Equals Group, which used to be called Fair FX. So again, traveling, foreign currency, I think could have a boom period. I think we're all fed up probably being locked up, and could do with a holiday or two.
Doesn't look like we're going to get that anytime soon, unfortunately, Chris. But look, thanks indeed for joining us. And I really hope we can get an opportunity to get back together again sometime in the new year when we get this COVID vaccine underway. And we hope it really does start to bring life back to some sort of normality. But in the meantime, look, thanks indeed for joining us. It's an excellent opportunity for us to look out to 2021. Let's hope it does bring some really good extra interest within the AIM market. Clearly, we're ending 2020 on a record high, but let's see what happens as we start into 2021. Chris, many thanks. Have a great Christmas and a new year. We're looking forward to speaking to you again at some time in the near future. That was Chris Boxall from Fundamental Asset Management. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.